Good morning, ladies and gentlemen, and welcome to the PCF Group PLC General Meeting. Throughout this recorded meeting, attendees online will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. I would now like to hand you over to the chairman of today's meeting, Mark. Good morning, sir.
Good morning. It's my pleasure to welcome shareholders here today in person and virtually for those who are online via the Investor Meet Company link to this general meeting of PCF Group. I'm Mark Sisby-Darrant, the Senior Independent Director of your company. I'm chairing this meeting this morning as Simon Moore is absent, attending a funeral today and sends his apologies. We are quorate for the purposes of the meeting. Those of you who've attended our general meetings previously will know that there is formal business of the day that will be entered into first. Then I and my fellow directors will answer general questions on the company, including those submitted prior to the meeting. With me today are your directors, Gary Strand and Caroline Richardson, and we also have members of the executive committee present with us. It's now 10:05, and I declare the meeting open. You will all have received the notice of the general meeting posted on the 10th of January 2024, and with your permission, I'll take that notice as read. Is everybody happy with that? Good, thank you. As explained in the notice of the meeting, this meeting has been convened to satisfy the requirements of the Companies Act 2006. There are no required resolutions to be put to shareholders to vote on by the Act, so to be clear, there will be no voting process today. So it is very much a question and answer session, presenting shareholders with an opportunity to discuss the matters before the meeting. To recap on the purpose of the meeting, in circumstances where the value of the company's net assets is equal to or less than half of its called up share capital, constituting a serious loss of capital under the Act, as is now the case for the company, we are required, pursuant to section 656 of the Act, to convene this meeting for the purpose of allowing shareholders to consider whether any, and if so, what steps should be taken to deal with the situation. In order to facilitate that, what is proposed is that the Chief Executive Officer, Gary Strand, will give a short presentation to set the scene as to how the asset value to share capital value ratio has arrived at where it is, thus requiring this meeting to be held and giving a sense the steps the company has already taken and proposes to continue to take in such circumstances. After which, I'll then open up the meeting to shareholders to raise questions, and in doing so, we will also address questions submitted in advance, as well as those raised by shareholders at this meeting. And in doing so, look to discuss the next steps as required by the Act. Gary, over to you.
Thank you, Mark. Good morning, everybody. Obviously, it's a disappointment to the board, to the management team, and I'm sure to shareholders to have a meeting like this. But I'll now take you through some of the detail which led to this particular position. We decided to start this at the share suspension in May 21 because I think that's sort of the baseline event. So our shares were suspended in May 21. The reasons for that are well known and were subject to quite a detailed RNS announcement in June 2021. Following that suspension, the focus of the team was to get the business back in shape. So ensure there were no other issues, get our house in order, and regulise our statutory reporting with the aim of getting the shares unsuspended. the reality is that until we put the house in order, it would be impossible for us to explore any other strategic options for the group. That sort of repair stage was crucial. Significant remediation work was undertaken, and there was a new financial control submission to AIM and the appointment of a new external auditor following EY's resignation. That sounds very easy saying it like this on a presentation, but each of those were quite in-depth, detailed processes to get through. The trading suspension was lifted, but then the shares were subsequently suspended again in April 22 for technical reasons, being that we hadn't produced our annual report and accounts in time because we were going through the catch-up from the early problems. So, next slide, please, Tim. I'll get used to saying that. Following that, we achieved some stability. The second share suspension was listed in May 22. That meant that we were then in a position where we could start thinking about the strategic options for the group. And having engaged corporate finance advisors, we looked at raising capital or executing a strategic transaction of some type, whether that be a merger or a sale. We entered into that process in a formal manner. It was an extensive process. We opened 21 data rooms for interested parties. We received 5 non-binding offers for the group or parts of it, but ultimately all of those strategic discussions failed. The primary reason for that was uncertainty around what is now known as historical commission issues. That's now current news. There's an FCA-wide industry investigation. And for our prospective counterparties, most of them, that was a major uncertainty which they couldn't get over. We did make reference to this in our annual report and accounts for the financial year 21-22. While we were running those processes, we thought it was important that we kept the brand of the business alive. We stayed in the marketplace. We continued lending as best we could, given our capital restrictions. We continued to operate a business as usual operation. Clearly, if we hadn't have done that, it would have presented us as a fire sale to any prospective purchaser, which would have impacted value. Unfortunately, that strategic process didn't deliver a transaction. We were unable to raise growth capital for the same reasons, and we concluded that exiting the market was the most appropriate action. We announced the suspension of new lending in October 22, and we then announced that we would exit the market in November 22. And as part of that process, we delisted from AIM because that was the right thing to do in terms of the complexity of the business and from a cost perspective. At that point, we immediately implemented cost reduction measures. So within 4 to 6 weeks, if my memory serves me correctly, we had unfortunately made redundant our entire new business team, and we had a plan for cost reduction as we went through this process. But we decided that we would pursue a twin track approach of still looking to explore an entity sale because we did have a banking license. So could we some way sell the legal entity without the liabilities which may or may not have arisen as a result of the historical commission issue, but also running alongside that, looking at a process to sell the loan book, the business's assets. Late June 23, our last credible entity sale discussions were terminated, but as a result of our twin track approach, we were able to execute the sale of our loan portfolio within days to a single buyer, being the most attractive option of the 4 bids that we received for the assets. And one of the key issues for us was finding a buyer who was prepared to buy all of the assets. Clearly, having liquidated the assets, our priority then was to repay our depositors as quickly as possible. We made a public announcement to that effect, and we achieved that when we repaid the last depositor in October 23. Very unusually, we did manage to repay all of our depositors, all their representatives, so there was no need for us to create a trust to hold funds for depositors, which again represented a significant cost saving. As far as we can ascertain, we did this more quickly than anybody had done it before, and that has a real impact on the cost base of the group, because clearly the sooner you can repay depositors, the sooner you can decommission parts of your operational infrastructure, and you've got to repay depositors before you can think about surrendering your license. So there was a real aim to do that as quickly and as efficiently as possible. Having repaid our depositors, our aim continued to be to complete the run-off process and liquidate the group as quickly as possible. This is a time is money situation. The sooner we can liquidate the group, the less money we spend doing it. It's a matter of public record that we surrendered our licenses to the FCA and PRA in December, and we now await their acceptance of these surrenders. They have 6 months to do that from receiving a completed and eligible application. In the intervening period, we are still a regulated financial services entity, so we still have to run certain operations, and we still have certain regulatory reporting obligations, and we're doing that as efficiently and as effectively as we can. The group now has got fewer than 20 employees, including directors. Nearly 100 people were made redundant. The rest went through some type of natural attrition. And again, unusually, we didn't have a single employment tribunal claim, which is a testament to the way that my team executed that process. Caroline, as was announced late last week, will leave the group tomorrow, effectively following this meeting. This meeting is about the net asset value of the business. So it was convened because we triggered the 50% of approximately a share capital of around about 17 million. The primary material drivers for the reduction of capital are just the natural impact of a runoff. So we sold our loan book. That was sold at a discount. People have to understand that we sold a fixed rate loan book in a rising interest rate environment against a macroeconomic backdrop, which was expecting an increase in impairments and defaults. So selling it at a discount is an entirely predictable thing to happen. That obviously has an impact on the capital. And then the group has accumulated losses as a result of the remediation activity that we had to undertake. Professional services assisting us with that. Operational and wind down costs, which naturally include staff, professional fees. And then there are a number of technical accounting adjustments which occur when you go from being a going concern accounting basis to a gone concern accounting basis, such as the impairment of intangibles. And as Mark has already said, the business of the meeting is to consider whether any, and if so, what steps should be taken to address the serious loss of capital pursuant to the Companies Act. It's the view of the board, and it's certainly the view of me as Chief Executive, that in a run-off scenario with a business with a capital base of this type, this is a natural corollary of the run-off process. Point one, I've just covered. To be absolutely clear here, one of the things that the board were very, very focused on through all of this, as they are duty bound to do, was trying to find a solution which created the best value for shareholders. And there was, an incredible amount of effort in achieving that. Outside events conspired against us, and so therefore we have to conclude that this was an unsuccessful process, and so therefore this is no longer a turnaround scenario. And as I said earlier, it remains the view of the board that the run-off process should continue despite the continuing impact on capital. It is a natural corollary of the run-off process. This isn't a pretty slide, but it's there just to show people what happened. As you can see there, the effect on our equity position from March 21. You can see a big drop there when we executed the asset sale. That's the impact of the loss on sale impacting our net asset value. And as you can see, it plateaus there. There's a couple of moves for technical reasons, but it would be fair to say that that will continue on a downward perspective and trajectory, unless something unusual happens, such as there are some contingent assets that we are pursuing that we make no allowance for, and if some of them were to be successful, there may be a slight change to the shape of that graph. And then again, just to show there what the impact of the shares being suspended, you can see there that once the shares were readmitted to the market, there was a considerable drop in the market cap of the business, which is obviously a direct result of the dynamics of the market being that there were more buyers than sellers. You can see the delisting point there. So that concludes the presentation. Obviously, we have a number of pre-submitted questions, and we'll deal with those. But for now, back to Mark.
Thank you, Gary. I propose that we now take specific questions on the loss of capital and next steps, and we'll deal with more general questions on the company and its business after that first phase of the meeting. But before we move on to that, just to comment that in the presentation, Gary has covered ground that does answer some of the questions that have been pre-submitted. So we'll sort of try and navigate our way through the meeting without duplicating answers to questions as we go. So to start the process, I'm going to ask Tim of Tavistock if he can take us through the questions posted in advance online, and I'm going to ask Gary to sort of determine whether he wants to answer those questions or pass them out to other people on the table in the interests of efficiency. And we have tried to group together some of the questions to cover the same subject on the loss of capital and next steps, and then further questions we can have after we've got through this phase of the meeting. But again, just to reiterate, thanks to people online and in the room who've submitted questions up to this point. So, Tim, over to you.
Thanks. So first question, do my shares in PCF Bank have any residual value? How can I find a buyer for these shares? And what has happened to the money realised from the sale of assets in 2023?
Okay, so happy for me to take that? Yeah, okay. So obviously people can trade their shares via asset match. Residual value, well, we've talked about net asset value. I'm not too sure if that's what people mean by residual value. And obviously there's a share price on asset match if you can find buyers and sellers. The money that was realised from the sale of the assets is covered in the next question, Tim, isn't it? So do you want me to, shall I just naturally go on?
Yeah.
So the funds received from the sale of the assets have been primarily used to repay depositors. That was the biggest liability for the business. Other liabilities as they fell due, costs associated with liquidating the business, and normal operational expenses.
So that next question is what's happened to the money realised from the sale of the assets in 2023? And the next question is what is the amount of the called up share capital?
Caroline, do you want to do that one? Sounds like a number one.
So the exact number is £16,690,506.80.
And what is the amount of the net assets and net assets per share?
All right.
So we are not going to disclose the current net assets per share at this stage. We last published the accounts to September 22, where net assets were 38.5 million, equating to 11.5 pence per share. The meeting's been called as the net assets value is less than 50% of the around 17 million share capital. So our net asset value is obviously less than that 8.5 million share capital.
Can I ask a question? Under what circumstances can you not now tell us the net per share? You're leaving tomorrow. You're obviously all making yourselves unemployed in the short and the intermediate future. Why is that not encourageable in this meeting?
Can I suggest that we get through these questions and then you come back and we'll deal with that? Okay.
And I guess just to add that we've previously given guidance that we expect any final distribution to be negligible, and we've not amended that guidance.
Next question, what is the figure for liabilities? When are they due and can they be prepaid?
Okay.
So our remaining liabilities now are our Tier 2 capital, and the staff-related exit costs and other accruals for general running costs, which include things like tax, professional services fees, utility bills, etc. Where there's been value for us to prepay and close out liabilities and contracts, we've done so. Not been able to do that for all contracts. And ultimately, the level of any future liabilities, our remaining costs for the group, is dependent on the time it takes for us to liquidate the group.
And I think this was covered slightly in the presentation, but the timing for the completion of the strategy to wind up the group and the impact the FCA investigation into historic finance commissions will have on that process.
The timings of this, as soon as we receive the surrender of licences, if we do, because obviously that's a matter for the FCA and the PRA, the directors will then undertake a assessment of the solvency of the business. Assuming that we sign that the business is solvent, we'll appoint a liquidator, and then the dissolution process will start. If we were to receive the surrender of our permissions today, I would imagine that we would be looking at the complete dissolution of the group, subject to shareholders giving permission for us to put it into liquidation, which is another meeting that we will have to have in due course. Depending on how the liquidator goes about this, I think a time span of 6 months, something like that, would not be unreasonable from today. But the key event is the surrender of the licences. Without the licences being accepted for surrender, we cannot move on to the next stage of the process.
And then, did you touch on the historic commissions?
Well, the historical finance commissions does have the ability to delay the liquidation of the group, dependent on the position that the regulator takes regarding the surrender of the licence while that's ongoing. But I think that the general view is that the outcome of all of that activity remains incredibly uncertain, but clearly things could change and it could have an impact on us.
Thanks. Next question, what are the views of Summers and the current status of the £10 million standby facility?
I'll take that, Karen. We can't speak for Summers, but we can confirm that their support for the company is as publicly announced, and the board are very grateful for that support. And the standby facility does stay in place as previously announced.
Do you have any forward projections available?
We have publicly announced that we believe that if there is a distribution to shareholders, it will not be a meaningful distribution.
And then the next question, when do you expect the banking license to be relinquished? I think we've covered that already. Next question. What specifically has happened since 30th of September 2022 to cause net assets to reduce to less than 50% of the issued share capital? This would amount to losses approximately 30 million having been incurred in the past 15 months. I think you've touched on this already.
Yeah, principally the impact of the sale of the loan book, the discount that we took on selling the loan book, and the costs associated with running the business.
Next question we touched on already as well. The size of the loss on the loan book.
We are not allowed to disclose the sale price of that loan book, and so therefore the loss, because that is a contractual obligation on us from the buyer.
Why do the business costs continue to be so large?
Well, okay, large is an interesting term. We've reduced the headcount of the group very quickly. We still have obligations that we have to fulfill, and we're doing that with the minimum level of staff we can. We've reduced the size of the board as quickly as we can. I think there's a question on that a little bit later. And so we are running this bank with the minimum level of staffing and costs that we possibly can. So, for example, I don't think there's anything sensitive about this. Our lease at Old Broad Street was approximately £1.2 million a year. There was a break clause, and last June we relocated the business into offices costing us £75,000 a year, Steve, is that right? Something like that. So we are taking every opportunity we can. We had, just in terms of the costs, we've had to deal with 300, I'm just asking Steve Butterworth, our Chief of Staff, 300 contracts, Steve?
Yeah, so we had approximately 300 suppliers, and that's been managed down to 6 over now.
And on all of those, where we could, we sought to terminate those contracts on a economically sensible basis.
Which we continue to do.
Yeah.
Another question on historical commissions and what the impact on the group that is.
Carol, do you want to talk about that? Because it was a note in the...
Yes. So it may well have an impact. There's still quite a lot of uncertainty. We noted this is a contingent liability in the accounts where we quantified a range of possible outflows from 0.3 million to 2.1 million. The FCA review doesn't conclude or isn't planned to conclude until September this year at the earliest. Now, depending on the outcome of that investigation, it could well change that range of impact, but we can't quantify what that could be at this stage because of the level of uncertainty. So we keep on top of complaints and continue to monitor the situation.
Next question is when the reports and accounts will be published.
So we extended the accounting period through to March 24. So we have 6 months for PLC from that date to put the to publish the accounts if a formal liquidation process hasn't begun by that point.
And when will the next AGM be held?
That's also 6 months from the end of March. But again, we would hope to come back to shareholders as soon as possible for a meeting to approve the move to liquidation.
Yeah. Is it worth just talking about that, just so people know? Correct me if I'm wrong here, Duncan. Once we've are satisfied with the solvency of the group, we will convene a general meeting to seek shareholder approval to put the business into formal liquidation. We have to give 21 days notice of that. Yeah, so we'll give 21 days notice of that, and at that point we will seek approval. If clearly our view is at the moment that this will be solvent, but if there were any changes to that, so for example, if anything happened on this historical investigation, the investigation into historical commission structures or anything else which impacted that, clearly we will make an announcement.
Next question is just confirming the following numbers. Net assets at 30th September 2022, 38.5 million. 50% of the called up share capital being 8.35 million. And the losses in 16 months since 30th September 2022, 30.15 million.
So we can confirm the net assets number and the called up share capital number as we've, or 50% of the share capital number as we've been through already. And yes, agree with the maths in terms of what the losses would then be. You know, we're saying that our net assets are less than 50%, so the losses are at least the 30.15.
Can you provide a breakdown to how these losses are made up? It seems unlikely they're solely as a result of monthly trading or in the presentation.
I think we can explain that. Yeah.
Given the fact that this was the largest corporate transaction in the company's history and that there is still technically a market in the shares of the company, please can you explain the board's rationale for not disclosing the financial details at the time of the announcement?
We had a contractual obligation not to. So the purchaser, who is a purchaser of assets, did not want us to disclose the details of that transaction, the economics. You can understand that, can't you? Because clearly the economics of the transaction has an impact on their operational activity. And in fact, I think that we had to work quite hard to actually get the name of the buyer in the public domain, Duncan, didn't we?
It's correct. At the time of doing the transaction, the buyer, for commercial and operational reasons, did not want to be identified, but they have subsequently been identified when the customer's loans were formally and legally transferred over to them in October.
Next question. At the AGM last March, you stated that the performance of the loan book was holding up very well and that the credit quality was strong. Why sell it as a loss? Wouldn't it have been better to collect out?
Okay, so we had to consider a few things. The first one was, if we were going to collect it out, we would have to have retained an operational infrastructure to do that. Against the falling book, you get into all sorts of issues there about retention of staff, economies of scale, etc., etc. We modelled all of those outcomes with our corporate finance advisors. We were in a position where we had a fixed rate book with a rising interest rate environment. So why would people invest in loans yielding X when they could put their money to play in the market at X plus? There were the macroeconomic indicators of the increase in defaults. And we took a view that on balance, that we wanted certainty and that the current economic indicators were such that we didn't want to be in a position where we could have found ourselves with a loan book which wasn't worth sufficient money to repay our depositors. And that would have been an issue. And actually that's played out because, as you will see in the press, there is rising corporate insolvencies, and there is a chance that if we'd have held on to this book, we could have found ourselves in a very difficult situation. So the board took the decision that for all of those reasons, the ability to repay savers, the certainty, the modelling that was done about the overall outcome to shareholders, that it was the right thing to do to sell the book.
Next question, what is the monthly run rate for trading losses?
That fluctuates because it depends what's happening with redundancies. But what we'll say is that obviously they reduce each month because we've got less people each month, and they fluctuate depending on where we are.
Is there any benefit in trying to sell the bank as it is today if it still has an IT infrastructure to originate loans and accept retail deposits?
We tried to do that, as I said in the presentation. That wasn't possible, and at this stage in the run-off process, we've decommissioned significant parts of our infrastructure, so there is really nothing left to sell now.
And then the last question is, why is the board the size it is?
Well, the board after today, the board is currently 4. It will go down to 3. We have been very aware of the comments regarding the size of the board. We've had to keep the board at a minimum size to meet our ongoing governance requirements and regulatory requirements. We looked at reducing the size of the board earlier. We did it as quickly as we could, and one of the key things that impacted that decision was not just the regulatory requirements, but there was a legal advice for directors as individuals that it would have been unwise for directors to resign from the board or leave the board until such times as our major liability, i.e. depositors, had been repaid. And as soon as those were repaid, you'll note that 3 board directors stepped down.
Thanks. They're all the pre-submitted questions.
So we should come back to the NAV value. You said on what basis are we not disclosing it? I don't think there is a legal basis whether we can't disclose it, because we can caveat it. I think the reason that we felt that it wasn't appropriate to disclose it is, 1, it's unaudited, so subject to change, and 2, it sets an expectation which is also subject to change. But I think if you go to the presentation and the NAV history, we don't disclose it exactly, but if you draw a straight line across on that table, you can see where we were at the end of December 23, which is the last available number, because obviously we've got some flash numbers for January, but not precise numbers. And it still moves around a bit, but if you draw a line across there, you can.
So why are you being so coy?
I'm not.
The time for being coy is kind of past, isn't it?
Yeah, I don't think I'm being coy. I think
you're saying draw a line on a graph.
Yeah. So
there's been a material loss of shareholder capital.
Yeah.
Of which you as a board have overseen in a latter part. So let's not be coy now. Let's all put our hands up as an organisation and look and say, right, you've got people here who have a severe material loss of capital from decisions you've made. I mean, it's also about the buyer. I've just been Googling, I see Asset Link.
Yeah.
Is this a related party?
No.
Will any of you go and work for Asset Link or any of their parties?
No.
Right. Thank you.
So, and I don't think we're being coy. I think what we're trying to do.
That's a matter of opinion.
Absolutely, which is why my opinion is I'm not, and yours is I am. So that's right. It's a matter of opinion. But we're not being coy. What we're saying is that we weren't prepared to give an exact number because it's unaudited and it's subject to change.
Have you got a ruler so I could draw a line in this meeting?
Caroline, would you like to give an approximate number?
Well, I think, to be honest, because it is unaudited and it's subject to change, so we tell
We're not always honest in this situation. You just have to be honest.
We know the numbers.
Everyone in this room who is not a member of your board or connected accepts it's subject to change. The net asset value has been subject to significant change as a result of a decision you've made as a board to sell the assets, which we have to accept as shareholders. So be honest, we accept the subject to change. What is the net asset value you could give us subject to change in the future?
What's the, Duncan, should we just give the net asset value at December 23 fully caveated? Unaudited?
no,
Yeah,
no problem.
carry on.
So it's around the 5 million mark.
Thank you. Wasn't so hard, was it?
No?
Thank you.
Now, obviously, you understand the calculation you're trying to make. We do it ourselves on a regular basis to assess solvency, right? There's inherent uncertainty, as we've said, about the expenses that we incur against that 5 million to what the endpoint will be.
And the significant part of that is is in the hands of the regulators around timing, because we have to have adequate resources in the business to run a regulated institution until such time as they surrender the license, or we've surrendered it. They've got to accept the surrender. So that's the reason for, if you like.
Yeah,
it's not prevarication. It's just that
we know
those decisions can have.
we know what it is. One of the things you've got to think about, and we think about, is that if you give people exact numbers, they latch on to that, and there's no secret about it. We've said it's unaudited, and we don't. It's about just trying to manage people's expectations, but it's out there now. That's fine.
You don't need to manage any expectations now. The reality is a catastrophic financial loss, of which has occurred and is going to continue to occur.
Yeah, exactly. And some people don't quite see it like that.
Well, it's not your job now to manage expectations. It's your job to give us facts as a board, unfortunately.
Okay.
And thank you for giving us that fact.
So that's it.
So
Open to the floor.
So we've answered all the pre-submitted questions, and obviously we've answered the question from the floor. Are there any more questions from the room? Are there any more online?
There's some more online. So I've got a question on why it's taken so long to wind things up. Is this a reflection of the board's wish to remain employed?
It hasn't taken a long time to wind things up. The loan book was sold at the end of July, and we are at a point where we repaid deposits in October, and we surrendered the banking license in December. I suspect it's the fastest it's ever been done. Well, it is. It's a fact.
Why can't you disclose the loss on sale of assets? How can there be any confidentiality issues when the purchaser's name is not mentioned? I think the purchaser's name has.
The purchaser's name is mentioned. Yeah.
Read the loss on the sale of the loan portfolio. This will presumably be disclosed in the next financial statements. So why can't you disclose it now?
Because we're not contractually allowed to disclose it now.
Why does the board skirt around questions about specific numbers and give answers which leave shareholders in the dark on the finance of the company? I think we just touched on that.
Just touched on it.
If net assets were £5 million at 31st of December 2023, why was this meeting not held earlier?
Duncan, do you want to give the legal reason?
Yeah, being transparent, the board was unaware of the Companies Act requirement. It was brought to its attention by its legal advisors in December, and we convened the meeting within the time periods required upon becoming aware of the requirement.
And the legal requirement is the directors call it upon becoming aware.
Correct.
Which is what we've done.
And then the last question is, will the presentation be available? Yes, it will be available online.
As will, I think, a recording of the...
And the recording of this whole general meeting. And they're the questions we've got.
Great. So thank you very much for those specific questions. We also throw the floor open for general questions if anybody has any general questions to ask. So either in the room or online. We've had a fairly wide-ranging number of questions anyway, so no more online. Any more questions?
Yeah, I'd like to ask you a follow-up. Asset linked capital. Is there any related connection to Somers or any? I mean, I don't know this company.
I'll can see where this one's going, so I'll answer it. There is absolutely no relationship of a commercial nature between any of the board members, directors, or employees of the group or Somers. This is a complete at arm's length transaction, which was subject to a very hard negotiation and competitive process. Well, you don't know what was paid.
Well, we can guess, can't we?
Of course you can, yeah.
But there was a competitive process run, right? We had several bidders and accepted the best bid.
Okay.
One second. Okay.
So I think we've exhausted the questions that are available, and I appreciate this is not an easy discussion for management and probably not for shareholders either. But very much appreciate people's attendance and call the meeting to a close and wish you a safe journey home. So thank you.
Thank you.
Perfect. Thank you all to the board for updating attendees online this morning. On behalf of the board of PCF Group PLC, we would like to thank you for attending today's general meeting. That now concludes today's session. So good morning to you all.